Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. I have been talking about lately how the PPI numbers could send markets flying one way or another. Last month, or 2 months ago rather, PPI index was negative 0.1%. The expected last month was 0.1%, and instead it was 0.3%, so higher than we expected. And here, last month 0.2, expected 0.1, and it was actually 0.6. So that was a lot higher than expected. But year over year, as you can see, we went from 1% down to 0.9%. The year over year is a better number to take a look at because it's taking a look at what happened since last January instead of just the last month. It takes seasonality out of the picture basically completely. And then you have core PPI actually flat. And so the markets really overall, if you saw the markets at all, didn't really react at all. Everything was basically flat. Nothing really notable was going on. Some people are saying that part of the reason for this is that, the casino, the big boys that are selling all these options contracts, were selling a lot of options contracts. A lot of investors were expecting a huge movement today, including myself who bought options with this expectation. And, when the casino is selling all these options, they're going to make sure that the market stays flat. I mean, that's a theory anyway. It's an idea. There might be more to it than that, especially when taking a look at the Fed funds futures. Just scrolling all the way out to December 2024, you look at previous day probability of what the rates were. We have hardly any difference between these numbers here, having a max rate of 4.5, for example, going from 33% probability to 32.5% probability. This is, it's like there was no report that came out today, even with the Fed funds futures. And then taking a look at the VIX, it's like we're seeing a little bit of a coiling up still from this previous large green candle. We're still inside of this green candle, and it seems to be flagging here. And so, whenever you have a flag, it's more typical if it was going up before for it to break higher, but, it just means that eventually we'll break out one way or another, but it means that, the markets really don't know what to do here. And that's really all I have for you today on market updates. Now, crystal ball wise, I wanted to add a few things. Yesterday, I pointed out this semiconductor stock and how it was incredible how it went up by something like 17 or 20% in one day on Thursday. And today, of course, it's down 20%. Whenever you have a company that has an incredible amount of speculative value, moves like this cannot be surprising to you. These are gamblers playing a game. This isn't investing. This is a gamble. 63 PE ratio means that this company needs to earn about 3 times as much as it's earning right now in order to prove that it is really to really prove that this price is worth it. And it's already at this price today, which is, it's just gambling. It's very silly. I want to just add a few more examples to this. We'll start with the trade desk, actually, a very popular stock. A lot of people know that it's a valuable company. It does make real money, but does it make enough money? Its PE ratio is at 247, and if we divide that by 20, we get 12. And so this company, in other words, needs to multiply the amount of money it can earn by 12 in order for this current price to be like a normal amount of money for a company to make. You know, a PE ratio of 20 is neither insanely cheap nor insanely expensive. It's kind of like, it's a little expensive for like a solid stock that you know is going to keep making a lot of money into the future. But you know, these PE ratios 60 of 60 or 250, there's so much speculative value that when the stock price jumps up and down 20% in one day, that's to be highly expected, because this is a gambling stock. This is not an investment. Benjamin Graham says in his book, Security Analysis, very wisely, that paying the wrong price for a security is equally bad as buying the wrong security. Let that sink in. Meanwhile, me and my crystal ball, if you've been following the show, I did say on February 5th that I thought that rare earth metals were getting ridiculously cheap down here in the mid 40s, and if you had invested, you would have done pretty well. This entire ETF has a PE ratio of 5. That means every $5 worth of stock that exists, it's earning $1, which is incredible. That is incredibly low. And as I had said just in our previous show, you know, if I'm going to be speculating, I'll speculate that, you know, a company that has already been proving itself to being able to earn tons of money, you know, being sold as if it's worth nothing, I'll have some of that, and then just wait for the markets to realize, like, oh wait, that company's making like so much money. Maybe we should like have it be priced at a normal, you know, some kind of normal price, you know, even from 5 to 7, which 7 is still extremely low, even by very traditional standards, even by Graham standards in the 1940s. So, and, you know, I want to point out the parallel as well. I had also brought up ILIT and lithium miners, and, you know, going from under $12 to already almost $14. And so there's the power of what some might call value investing. Last crystal ball reading, I just wanted to point out real quick. I had been talking about silver junior miners on Wednesday, and we have already bounced up from that significantly. You know, when you have price movements of this magnitude from $8 to $8.25 in a very widely diversified fund, it's that's a good game to be playing. Especially, you look at 6 months back, you can see we haven't broken this trend line, and it looks like this for now. This still looks like a bottom in this market that me and my crystal ball probably, I think at this point did nail right on the head. My crystal ball is not always right. I thought that Bitcoin would be going lower than where it had gone. We're up at 52,000. I thought we were going from 48 like straight down to 26,000. You know, I've had some calls better than others, but you know, at the end of the day, we all need to use all of the knowledge and ability and logic that we have to try to make the best decisions that we can for deploying our capital. And that's all I have for you for this show. Thank you very much for watching. Robschild.